There is a moment in every trader's life when the market stops being a game and starts acting like a mirror. That's the moment Jesse Livermore was obsessed with. When I talk about inside Jesse Livermore's mind, I'm not talking about a list of quotes or museum of old trades. I'm talking about a single mental switch, a psychological shift that changed how we approached every decision in the market. And if you'll let it, it will change how you approach yours. I want you to picture this with me. You're in front of your screens. Futures are moving. Your watch list is alive. A familiar inner voice whispers, "What's going to happen next? Which stock is going to explode today?" You lean forward, eyes scanning, brain trying to predict the future. That's how most traders live, in prediction mode, in outcome mode, in ego mode. Livermore learned, violently, that this mindset is fatal over the long run. The shift he made sounds almost too simple when you say it out loud, but it's brutally hard to live. He stopped asking, "Will I be right?" He started asking, "Will I obey?" Obey what? Not the crowd, not the news, not the guru of the day. He chose to obey his rules, his tape, and his process, even when his ego wanted something else. That sounds philosophical, but it's intensely practical. When you're obsessed with being right, every trade becomes a test of your identity. A red candle feels like an insult. A stopped-out trade feels like a personal failure. You start bending rules to protect your self-image instead of protecting your capital. Livermore's psychological shift reversed that. He accepted that he could not control the market, could not control outcomes, could not force a stock to move. What he could control was whether his behavior lined up with a set of principles he trusted. Follow the tape, respect risk, wait for confirmation, trade in harmony with the main trend, never average down a loser, stay out when conditions are wrong. The key is this. The question in his head changed from, "How do I prove I'm right?" to, "How do I act like a professional, regardless of what happens?" That's the mind we're trying to step into in this documentary. I'm not here to turn you into a clone of Jesse Livermore. That's impossible and pointless. I'm here to walk you through that one central shift and show how it threads through everything. His entries, his exits, his patience, his risk management, his ability to stand aside for long stretches while others chase noise. You and I have felt the opposite, haven't we? We felt that urge to get in just so we're not left out. We felt that desperation to get it back after a bad trade. We felt that secret satisfaction when we nailed a direction, even if the trade itself was sloppy and oversized. Livermore lived all that on a scale big enough to make and lose fortunes. He watched his own mind sabotage him when he was focused on glory instead of good process. That's why later in his career, everything turned around a single question. Am I trading my opinion, or am I trading my rules? As you listen, I want you to be honest with yourself. Right now, in your current trading, are you more obsessed with being right or with being consistent? Comment below with one word: right or consistent. In this video, we're going to walk through how that one psychological shift from ego to obedience, from prediction to process, changes your relationship with every chart you open. But we can't get there without first stepping into the internal war you already know too well. The conflict between the part of you that wants to act now and the quieter part that knows you should wait. In the next section, we'll dive into that inner conflict, the paradox every trader lives inside, how the same mind that wants financial freedom often behaves in ways that guarantee financial chaos. That conflict between ego and obedience doesn't stay abstract. It shows up in 100 tiny decisions every time you sit down to trade. On one side of your mind, there's the part that wants to be consistent, to follow rules, to think like Livermore. On the other side, there's the quieter but more dangerous voice that whispers, "Come on, just this once. You know where this is going. Take the shot." Livermore lived inside that same split. He wanted to be free, wealthy, respected, the same things you and I want. But he noticed something deeply uncomfortable. The very impulses that drove him toward the market,
Excitement, curiosity, ambition were the same impulses that made him break his own rules. The thing that drew him to speculation also made him emotionally unfit to speculate unless he disciplined it. Here's the paradox. To make serious money in the market, you have to take risk. You have to step into uncertainty. You have to place capital into something you cannot control. But the more attached you are to the outcome, the more you need that trade to work, the more likely you are to manage it badly. The more desperate you are to win, the more you'll move stops, add to losers, chase late, and freeze when you should cut. Livermore understood that the market uses this paradox against you. When you're up, the market tempts you to feel invincible. When you're down, it tempts you to feel cursed. In both states, you're nudged away from rule-based behavior and toward emotional behavior. He started to see a pattern. When he traded to prove he was right, the market punished him. When he traded to obey his rules, the market sometimes rewarded him and sometimes didn't, but his overall equity curve, over time, bent upward. Modern traders face an even sharper version of this paradox. You're not just reacting to your own P&L, you're reacting to everyone else's highlight reel. Screenshots of massive wins. I caught this bottom. I knew this would rip. All of that quietly tells your ego, you're behind. You need to catch up. You should be doing better by now. And here's the sick twist. Sometimes, when you give in to that pressure and take a reckless trade, it works. You size too big, chase too late, ignore your plan, and the market pays you anyway. Short term, you feel like a genius. But something corrosive gets installed in your mind, the belief that breaking your rules isn't that bad. Livermore's psychological shift was his answer to this exact trap. He decided that the real scoreboard was not this trade's P&L, but whether he had acted according to his framework. Winning while breaking his rules was not a victory, it was a warning. Losing while following his rules was not a failure, it was tuition. That is a radically different way to live inside the market. If you look at your last 10 trades, how many times did you feel secretly proud of a win that actually broke your own rules? And how many times did you feel ashamed of a loss even though you followed your plan? Be honest and drop a ratio in the comments. Wins bad, losses good. This paradox, needing to risk but needing to detach from the result, is the core tension of trading psychology. And if we leave it unnamed, it quietly runs the show. In the next section, I want to zoom in even tighter and give this pattern a shape. The psychological trap that pulls you away from Livermore's mindset and keeps you cycling between hope, regret, and self-sabotage, even when you know better, logically.
When I really sit with that ratio, those wins I got while breaking my rules and those losses I took while doing everything right, I start to see how the trap actually works. It's not just random bad behavior. It's a self-reinforcing loop the market quietly trains into you if you're not paying attention. It usually starts with a stretch of pain or boredom. Maybe you've had a series of small losses following your plan. Maybe the market has been choppy. Your setups aren't triggering and you're just tired of waiting. Inside, there's this growing sense of, I deserve a good trade. You don't say it out loud, but it's there. Then an opportunity appears, or something that looks like one. A fast mover, a clean story, a ticker everyone is talking about. You tell yourself you're evaluating it, but underneath you're searching for reasons to justify what you already want to do. Act. Instead of asking, does this fit my rules? You start asking, can I make this fit my rules? That's the first stage of the trap, bending your framework to fit your emotional need. You get in, maybe you chase a little, maybe your stop is wider than usual, maybe it didn't fully wait for confirmation, and then price goes your way. That's the second stage, reinforcement. Your nervous system gets a hit of relief and excitement at the same time. You broke discipline and you were rewarded. Livermore understood how dangerous that is. The market just taught you that your rules are optional. Your brain files away a new destructive belief. I can get away with it. I knew I was right. From that moment on, the next emotional trade is easier. The threshold for breaking your own rules gets lower. The third stage is inevitable. The same pattern shows up again, this time with worse timing, in a harsher tape, on a weaker setup. You break your rules again, but the market doesn't cooperate. This one reverses. It gaps. It slices right through the stop you meant to use, but didn't place. Now you're in the part of the loop where identity and money collide. You're not just losing, you're offended. It feels unfair. That's when revenge trading shows up dressed as opportunity. You double down. You move the stop. You add size to get the average down. You convince yourself that the market is irrational and will come back. The trap has fully closed. You're no longer trading your plan or even the tape. You're trading your pain. Livermore saw this pattern long before we had a name for it. He noticed that when he was in this state, his intelligence didn't matter. His experience didn't matter. The more emotional he became, the more he selectively remembered only the times breaking the rules worked and forgot all the times it blew him up. That selective memory is part of the trap too. From the outside, this looks obvious. From the inside, it feels like survival. And that's what makes it so hard to escape. The behavior that's destroying you feels like the only path to feeling okay again. If you've ever felt that "I'll just fix it with one good trade" energy after a bad loss, type "loop" in the comments, just to admit to yourself you've seen this pattern up close. What Livermore eventually realized is that you can't think your way out of this loop in the heat of the moment. You have to change the terms of the game in your own head. In the next section, we'll step deeper into his perspective, how he redefined what it meant to win in the market, and how that one mental reframe started to weaken the trap from the inside.
When I look at that loop, rules bent, rewarded, then punished, it becomes obvious why Livermore had to change what winning meant to him. As long as a green P&L was the only definition of success, the trap owned him. The market could always bait him into bad behavior by dangling the chance to feel right, rich, or redeemed. His real breakthrough was brutally simple. He stopped measuring victory trade by trade and started measuring it by decision. A good trade wasn't one that made money, it was one that faithfully expressed his method. A bad trade wasn't one that lost money, it was one that betrayed his rules. That single reframe flipped the power dynamic in his mind. Instead of asking, "Did I make money on this idea?" he asked, "Did I think and act like the trader I claim to be?" That's the psychological shift in its purest form. He no longer saw the market as an examiner handing out grades on his intelligence. He saw it as a vast, noisy mechanism that occasionally paid those who were aligned with its direction and structure, and sometimes punished them anyway. His job wasn't to win every encounter. His job was to show up to each encounter with the same disciplined posture. He also stopped romanticizing being early. In his earlier days, he prided himself on seeing moves before others, calling turns, nailing tops and bottoms, but over time, he realized something ugly. A lot of that pride came from ego, not edge. He started to say, in various ways, that being too early is just another form of being wrong. The tape didn't care that he had the right idea first. It only paid him when his timing and risk were right. So he shifted allegiance. Instead of loyalty to his opinions, he developed loyalty to the tape and to his own framework. The crowd could scream that a stock was cheap. The tape might say it was under distribution. His old self would have tried to out-argue the market. The new self said, "The tape is never wrong. Only opinions can be." Modern traders struggle with this in a slightly different costume. Our opinions are reinforced by feeds, threads, YouTube videos, and long-form theses. Once you've invested time and identity into a narrative, it becomes very hard to let the tape overrule you. You don't want to cut, because cutting means admitting that your beautiful story doesn't matter to the market right now. Livermore trained himself to do the opposite. He might spend weeks watching a stock, forming an opinion, waiting for the moment. But if the confirmation never came, if the volume was weak, if the breakout failed, if the general market turned against the idea, he let it go. No trade, no revenge, just another page in his mental notebook about how the market chose to behave. If you really think about it, how often do you cling to a trade or bias because you've talked about it publicly or hyped it to yourself? Drop a comment with "story" if you've ever stayed in a bad position just to avoid admitting your narrative was wrong. The more he lived this way, the more his identity decoupled from single outcomes. He could sit on his hands in a bad market and still feel professional, because his standard wasn't, "Did I make money today?" It was, "Did I obey my rules today?" That's a huge shift. It turned flat days and small red days into acceptable costs of doing business instead of personal humiliations. From that vantage point, he could look at the same loop we described earlier and see it clearly. The market tempting him to trade his ego instead of his edge. And from that vantage point, he started building very specific habits to protect that psychological shift. Habits about sitting out, about waiting for strength, about never averaging down, about pyramiding only in winners. In the next section, I want to step out of the abstract and into a single detailed moment. One of those days where this mindset is tested. We'll walk through a story where the old pattern is awake inside me, the market is offering bait, and the only real question is, do I think like old Livermore or the Livermore who made that inner switch?
There was a morning not too long ago that forced me to see exactly how much of this psychological shift I had really internalized. Everything we've talked about, ego versus obedience, narrative versus tape, showed up on one chart in real time. The backdrop was rough. The indices had been grinding lower for days, fake bounces getting sold, breakouts failing almost immediately. If I'm honest, I was frustrated. I'd been following my rules, keeping risk small, sitting out when conditions were clearly ruthless. That's professional behavior, but it doesn't always feel good. It feels like you're watching the game from the bench while everyone else is playing. Then came the bait. One of the high beta tech names I track, let's call it Novacore, had been slapped down with the rest of the market. But overnight, some positive news hit. An analyst upgrade, strong pre-orders for a new product, glowing headlines. Pre-market, it was up sharply while the broader futures were still heavy. My feed lit up. People were calling it the turnaround play, the relative strength monster, the smart money accumulation story. Old me, old Livermore, would have felt an immediate surge of, "This is the one." But I paused and asked the question the newer version of him lived by. Am I trading my opinion or my rules? First, I checked the tape in context. The general market was still in a downtrend. Rallies had been selling opportunities, not launching pads. That meant the environment was still ruthless, not forgiving. My rules say, in a ruthless tape, you pay extra respect to confirmation and structure. That's the obedience mindset. Next, I zoomed in on Novacore itself. The daily chart showed a violent gap from the middle of a messy range. No clear base, no tight consolidation, just a sharp spike off the lows into an area that had previously acted as supply. In other words, there was noise, but not yet order. My framework says, I can be interested, but I can't be in a hurry. Internally, though, the ego was restless. I could feel the story forming. This is the one people will brag about catching at the open. This is how you make back a quiet week in one move. If you were really sharp, you'd already be in. That's the exact moment Livermore was training himself to recognize, not as a signal to trade, but as a signal to be suspicious of his own motives. He would ask, am I excited because the trade fits my rules, or because I want relief? So I decided to do something very simple and very difficult. I let the open happen without touching it. I watched the first 5, then 10, then 15 minutes. Novacore ripped off the bell just like the story predicted. Screenshots started appearing on social media. Plus 6% already. Caught this beast from the open. This is how you buy fear. For a few minutes,
It looked like I was the fool. But as the first hour unfolded, the character changed. Volume stayed high, but the candles started to look different. Long wicks, failed pushes. Every attempt to make a new intraday high was sold into a little faster. By midday, Novacor had given back a huge chunk of its gains and was flirting with red, dragging a fresh cluster of late buyers into discomfort. The old version of me would have been in that cluster, rationalizing why I shouldn't cut, blaming algos, telling myself it would bounce. The version of me trying to think like post-shift Livermore was flat, watching, taking notes. Same chart, same information, completely different experience. The interesting part is this: I didn't make money on Novacar that day. There was no heroic short, no perfect fade. The win was invisible on the P&L. It was purely psychological. I had put my rules above my need to participate. I had refused the bait when the tape and structure didn't justify it. That's exactly the kind of quiet victory Livermore anchored his identity to. Have you ever watched a stock you almost chased, completely reverse, and felt that bittersweet mix of relief and anger at yourself? Drop a dodged one in the comments if you've lived that scene. That day didn't prove I'd fully mastered this shift. It just proved I could live it once. The real test comes when the market doesn't reward your discipline so obviously, when you follow your rules and still take heat, or sitting out means watching a move actually keep going without you. In the next section, I want to walk into that harder place, the emotional low points and uncomfortable moments where obeying your framework feels pointless, and how Livermore handled those stretches without slipping back into the old loop.
There's another side to that Novacor day that I have to be honest about. It's easy to feel smart when the stock you didn't chase ends up punishing everyone else. You get this quiet satisfaction. See, my discipline saved me. But the market doesn't always reward discipline that neatly. Sometimes you obey your framework, and it still feels like you're losing. There was a stretch where that feeling almost broke me. I was doing everything right on paper, reading the tape, respecting the trend, waiting for confirmation, cutting losers at my predefined levels, and yet, trade after trade, the results were lukewarm at best. Small gains, small losses, lots of noise. Then, the few times I broke my rules, that's when I caught a big move. It created this sick inner dialogue. Maybe you're being too rigid. Maybe the rules are holding you back. Look, when you listen to your gut, it actually worked. This is where the psychological shift is tested for real. It's easy to believe in discipline when it lines up with profit. It's much harder when discipline and profit diverge in the short term. That's when the old Livermore, the one obsessed with being right, with glory, with big scores, whispers from the past. Forget the rules, just trade. Livermore went through this on a much bigger scale. He had periods where the market simply didn't suit his style, where his best methods underperformed, where the tape was treacherous and trends were thin. In those stretches, he could have proven to himself that his rules were broken. Instead, he treated those periods as environmental, not personal. His core belief became, the fact that I'm not making large profits right now doesn't mean my discipline is wrong. It may just mean the market is not offering the kind of opportunities my discipline is built to capture. That's a huge mental reframe. Instead of asking, why aren't my rules printing money every week? He asked, am I surviving intact so I'm here when conditions finally align with my edge? His low points weren't just about drawdown. They were about temptation. Temptation to abandon the psychological shift and go back to ego-driven trading, just because the tape was temporarily cruel. I felt that same temptation. On bad weeks, I'd catch myself scrolling back through charts of moves I could have taken if I just relaxed my standards. Then, I'd project those imaginary wins onto my equity curve and feel this sharp sting of regret. It took a lot of honesty to admit what I was really doing, grieving the version of myself who didn't have rules, who chased everything,
and occasionally hit jackpots right before blowing up. The turning point for me and for Livermore was accepting that consistency of behavior is the only path to consistency of results. Not linear profits, not every week green, but a curve that makes sense over a long enough timeline. That acceptance doesn't remove the emotional sting of flat or red periods, but it gives you a reason to stay loyal to your framework when it would be so much easier to abandon it. If you've ever stared at your rules and thought, these aren't working, maybe I should just go back to winging it, type "still here" in the comments just to acknowledge that you've stood on that edge. From this low, questioning place, Livermore didn't add more noise. He distilled things further. Out of all his methods, observations, and pain, he leaned into a handful of core psychological laws that he refused to violate, the inner backbone behind every tactic. In the next section, I want to focus on that, the central breakthrough lesson inside his mind, the one governing rule that everything else in his trading life ended up orbiting around.
When I sat with that feeling of maybe the rules don't work, I realized I was facing the same crossroads Livermore had faced over and over. Either I accept that trading is about me controlling myself, or I keep pretending it's about me controlling the market. That's where his deepest breakthrough sits. For all the quotes, tactics, and famous stories, the center of his mind came down to one governing law. The market is always right. The only thing that can be wrong is my behavior. Once he truly accepted that, everything else rearranged itself. If the market is always right, then arguing with it is pointless. Holding and hoping is pointless. Averaging down a loser is not conviction, it's rebellion against reality. And just as importantly, being early and smart while price disagrees is not wisdom. It's still just wrong. So he built a simple hierarchy in his head. 1. The tape and conditions sit at the top. 2. His rules and risk limits serve that reality. 3. His opinions and emotions sit at the very bottom. Whenever those bottom layers tried to climb above the top, he knew he was in danger. That's the psychological shift. He stopped negotiating with the market and started negotiating with himself. It sounds abstract until you translate it into a moment you and I recognize. You're in a losing trade. Your stop is close. Price ticks toward it. The old hierarchy says, I know this will bounce. I'll just widen the stop. The market is overreacting. The Livermore hierarchy says, the tape is telling me this idea is wrong on my terms. My job is not to rescue my ego. My job is to obey the terms I set when I was calm. Same chart, two different minds. This is why his never average down stance was more than a tactic. It was a psychological declaration. I will not use more money to fight the market's message. When he added to strength, not weakness, because strength meant alignment between price and his thesis. He was paying for proof, not for hope. And it runs deeper. He also accepted that he couldn't demand opportunity from the market. If conditions weren't right, if the general trend was choppy, if leaders were absent, if breakouts were failing, he didn't take it personally. He didn't let boredom bully him into action. The governing rules still applied. The market is right to be messy today. My job is to be right about my own behavior, not about every wiggle of price. For me, the most confronting part of this lesson is what it implies about responsibility. As long as I secretly believe the market screwed me, I stay stuck. The moment I say, no, the market just did what it does, I chose to ignore my framework, things get painful but clear. Now there's something I can change, not the environment, but my alignment with it. If you're honest with yourself, which sentence feels more natural in your internal dialogue right now? The market is wrong about this, or I was wrong to fight this? Drop market or me in the comments. No judgment, just awareness. From this core rule, market always right, behavior accountable, flows everything else we've talked about. Cutting losers, waiting for confirmation, not forcing trades in bad conditions, building around leaders, scaling in only when the tape agrees. In the next section, I want to show how this governing law fits perfectly into our world of instant information,
cryptomanias, option premiums, and social media pressure, and how thinking like this actually takes pressure off you as a modern trader instead of adding more.
When I really let that hierarchy sink in, tape and conditions at the top, rules and risk in the middle, opinions and emotions at the bottom, it suddenly feels like I'm looking at modern markets with a different pair of eyes. Because if there was ever a time when this psychological shift was needed, it's now. We're trading in a world Livermore never saw. Zero commission platforms, bright green and red buttons, instant fills, crypto trading 24/7, options that can 10x in a day, feeds screaming every tick. Everything around you is designed to amplify the bottom of that hierarchy, your feelings, your FOMO, your urge to do something. In that environment, trying to control the market is insanity. You can't outreact the algos, you can't outnews the institutions, you can't outspeed the machines. But you don't have to. The shift inside Livermore's mind actually reduces your workload as a modern trader. It shrinks your job description down to something humanly possible. Read the environment honestly, build rules that fit you and your account, obey those rules even when your ego protests. The rest, every tick, every squeeze, every rug pull, is just background noise. In practical terms, that means I no longer feel compelled to chase every move I see on social media. When some meme stock or altcoin is exploding, I don't have to decide whether the market is wrong or irrational. I just ask, does this setup fit my conditions, my structure, my risk, my time frame? If not, it doesn't exist for me, no matter how loud it gets. The market gets to be right about that move without me needing to participate. It also changes how I use tools, scanners, heat maps, unusual options flow, Twitter, Discord. None of these are the edge anymore. They're just inputs. The edge is how consistently I filter those inputs through my hierarchy. The old me would see a spike in volume and think, move now or you'll miss it. The Livermore version of me sees the same spike and thinks, interesting. Does this confirm or contradict my framework? If it doesn't fit, it's not my trade. Another big application is in handling drawdowns and missed moves. In the old mindset, a drawdown felt like proof that either I was stupid or the market was rigged. A missed runner felt like a moral failing, like, you idiot, that was your chance. Now the question is simpler. Did I behave according to my process? If I followed my process and missed a move because it didn't meet my criteria, that's not a wound, it's a data point. It tells me whether my rules are too tight or well-tuned, but it doesn't demand that I abandon them midstream. If I took a loss while obeying my framework, that's not a crisis, it's rent. Only when I broke the hierarchy, put the I know above the tape says, do I have something serious to fix. This also frees you from needing a constant opinion. You don't have to have a take on every ticker, every macro event, every CPI print. You can let the market vote first and let your system respond second. That alone cuts your emotional load in half. Instead of waking up thinking, what do I think about everything? You wake up thinking, what is my environment and what behaviors does that environment require from me today? If you imagine trading the next 12 months with this hierarchy, market first, rules second, ego last, what's the one behavior you know would change immediately for you? Would you chase less, cut quicker, sit out more? Drop it in the comments so your future self has something to answer to. All of this sets the stage for something very concrete, turning the psychological architecture into an actual, repeatable routine. Not just an idea you agree with, but a sequence you move through before each trade, so your behavior lines up with this shift automatically. In the next section, I want to walk you through that step-by-step implementation, the mental checklist that translates inside Jesse Livermore's mind into button-click decisions on your own platform.
So let's turn all of this into something you can actually do, trade after trade, not just something you nod along to. The whole point of stepping inside Livermore's mind is to walk back out with a routine, not just admiration. For me, it starts before the platform even feels live. I don't look at individual setups first. I look at the environment.
One screen, higher time frames on the indices, sectors, maybe a volatility index. I ask a few blunt questions. Are we generally trending up, down, or chopping sideways? Have breakouts recently been rewarded or slapped down? Are leaders extending or failing? I give the day a label: forgiving, neutral, or ruthless. That label dictates my posture. In a forgiving tape, I allow a bit more aggression, a bit more patience with winners. In a ruthless tape, I cut position size, reduce the number of trades I'm allowed to take, or even pre-decide that today is an observation day only. That's Livermore's market first law in calendar form. Next, I build or refine the watch list. From scans and relative strength, I narrow down to names that are consistently stronger than the market. Leaders in their sectors, heavy volume on rallies, shallow pullbacks on dips. I don't need 50. A focused list of 10 to 20 is plenty. These are my universe. Outside of them, noise is free to scream without my money. Then, I start drawing lines. For each name, I mark the obvious support, resistance, bases, and ranges. I'm defining the battlefield in advance. I decide where a breakout would actually mean something, where a breakdown would actually mean distribution. At this stage, I'm not thinking about entries. I'm just mapping areas where the tape could prove a thesis right or wrong. Once the map is set, I hand some work off to the tools. I place alerts at the key levels that would qualify as confirmation in Livermore's language: a base high with room above, a prior high reclaim after a washout, a key support where I'd look for rejection or failure. Now, I don't have to chase every tick. I can let the market tap me on the shoulder when it does something that intersects with my plan. When an alert fires, only then do I build an actual trade idea. I check. Is the general tape still aligned with this direction? Is this name still a leader today, or has it slipped? Has the move just started, or is it already extended? If it still qualifies, I define the risk line. Not where would it hurt, but where is this idea objectively broken? Maybe it's below the base low, below a key moving average, or under a support level that's been tested multiple times. I write that level down. Then I size the trade from that distance, tying my position to a fixed fraction of my capital at risk. Before I touch the button, there's one last filter: a short internal check-in. Am I calm? Am I okay if this stops out immediately according to plan? Or am I secretly trying to avenge a previous loss, catch up on a slow week, or prove I still got it? If the emotional motive is louder than the logical one, I let the setup go, even if everything else looks perfect. That's the ego at the bottom rule enforced at the final second. After the trade, I log it in simple language: what the environment was, why this name, what level invalidated it, how I felt going in, and whether I followed the plan. Over time, this creates a mirror, not of the market, but of my own behavior inside Livermore's framework. Used this way, the psychological shift stops being a nice idea and becomes muscle memory, your default sequence, not your exception.
When you live that sequence long enough, environment first, leaders next, structure, confirmation, risk, and finally the emotional check, something subtle shifts in how you see yourself around the market. You're no longer just someone who tries to make money from trading. You become someone who has a defined way of interacting with uncertainty, a code you operate by even when nobody's watching. That's really what I think of when I imagine being inside Jesse Livermore's mind. Not a magical instinct, not a mystical feel for tops and bottoms, but a hard-earned acceptance of his role. He was not the architect of the market, only a participant. His power didn't come from forecasting every turn. It came from responding consistently when the tape and his rules aligned. When you adopt that same psychological shift, the emotional landscape changes. A missed move hurts less because you know why you chose not to take it. A stopped-out trade stings, but it doesn't shatter you
because you can point back to your process and say, I would take this again under the same conditions. Even flat days stop feeling like wasted time and start feeling like another brick laid in a long wall of discipline. And the market itself starts to look different. It's not this hostile, manipulative beast that's against you. It's more like a wild ocean. Powerful, unpredictable in the small details, but with currents and tides you can respect. You don't yell at the waves for being waves. You learn when to sail, when to anchor, and when to stay on the shore. Livermore's shift was exactly that, from arguing with the ocean to studying it, then deciding when he had no business being in the water. Your identity as a trader starts to detach from any single screenshot or single month. Instead of thinking, I'm good because I crushed this trade, or I'm trash because I messed up this week, the question becomes quieter, deeper. Am I becoming more loyal to my rules than to my impulses? That's the one psychological shift this entire journey has been circling around. Not a clever trick, not a secret indicator, but a ruthless change in allegiance, away from your need to be right and toward your commitment to behave right. Away from trying to control the market and toward taking radical responsibility for how you show up in front of it. There will still be days you slip, times you override the checklist, trades where you hear the voice of old you a little louder than you'd like. That's normal. The difference now is that you can see those moments for what they are, not proof that the shift failed, but reminders of why it matters. Each time you come back to the hierarchy, market first, rules second, ego last, you're strengthening the new wiring and weakening the old loop. In the long run, that's what compounds. Not just the capital you protect or grow, but the self-trust you build. You become someone whose future decisions you can rely on, not someone you're constantly afraid will sabotage you when emotions spike. That's worth more than any single monster trade. So as you step away from this video and back to your own platform, I want you to answer one thing in the comments. What is the one behavior you will change in your next 20 trades to honor this shift? Less chasing, stricter cutting, more sitting out, or always defining risk first? Write it down and come back after those 20 trades and see whether you actually lived inside the mindset you just explored. The market will keep doing what it's always done. The real question now is, the next time you're sitting in front of a live chart, will you trade your opinion or your rules?